Okay, this video is going to talk about how partnerships divide income. So on our last video, we just divided it 50%. And sometimes partnerships do that, but sometimes they want to divide it differently, and they can do that. So if there's no specific agreement, then the income and losses of the partnership are divided equally, just as we did in our previous video. However, oftentimes they decide and agree to divide it differently. Sometimes it's going to be based on the service of the partners. Other times it will be based on the services and the investments. In other words, what the partners have put in. So it kind of makes sense that if you have a partner that put in $100 and another partner that put in $10,000, you may wish for that partner that put in more to get more of the profits. So let's look and see how this is going to work. Alright, so if we divide this income by the services that each partner puts into the partnership, then we're going to call this an allowance. So look at this example right here. Assume that the partnership agreement of Jennifer Stone and Crystal Mills provide for the following. Jennifer Stone is going to get a $5,000 monthly salary allowance, and Crystal Mills will get a $4,000 monthly salary allowance. So what we're saying is that whatever the partnership's net income is, of that, we're going to give a portion to Jennifer Stone and a portion to Crystal Mills. And the portion that Jennifer will get is a $5,000 per month, and the Crystal Mills a $4,000. So when we do this, we're going to say that the partnership made $150,000. And so the annual salary allowance for Jennifer will be $5,000 times 12 is $60,000. And for Crystal Mills, it'll be $4,000 times 12 at $48,000. So right off the bat, just for the services that they've put in, just for the time they put into their partnership, they're going to allocate out $108,000. So what we're going to say is that we had a total of net income of $150,000. Subtract out $108,000, and then we've got $42,000 left to decide how we want to divvy it up. So how do we want to divvy it up? Well, because the agreement will tell us in this particular situation, the rest of it is going to be 50%. So it has to tell you that. But in this situation, the rest of it is 50%. So we're going to say 42,000 times 50% or a half is 21,000 and 21,000. So J Stone of the 150 will be allocated 81,000, and C Mills, what was her name, Crystal, will be allocated 69,000 for the total 150. So remember when we closed the month and we moved it out of net income and into capital? We move it out of this $150,000 net income summary, and we move it into the capital accounts, but we have to put it to the specific capital account. So J Stone, you'll credit her capital account for $81,000, and you'll credit Crystal for $69,000. So that's how we're going to use this. Here's what that entry would look like. Debit income summary and credit each of their capital accounts for the amount that we calculated per their partnership agreement. Okay, and those partners can even get more specific about how they want to divvy up their income. So they can do the salary allowances as we saw. They can also do an interest amount on their capital investments and then do any remaining income equally. So let's assume that they have the monthly salary allowance still of the $5,000 and $4,000 respectively. But in addition to that, before they split up anything, they also want to give each other 12% of their partner's capital balances. So they're going to say 12% times $160,000 because that's the beginning capital balance for Jennifer. And then $120,000 times 12% for Crystal, and then the rest of it will be divided equally. So let's look and see what this looks like when we do that. We still start off with our $150,000, and then we're going to give them their salary allowance, and then we're going to do this new line item called interest allowance. We'll take their beginning capital times the percent that they agreed upon, and we'll put that towards their net income. And so then we do this calculation to see how much remaining will be split up 50%. So 108 plus 33 means that we've already allocated out 141,600. So we're going to take 150,000 minus the 141,600 and know that we need to divvy up $8,400 more dollars. So 50% of that is $4,200 each, and that gets us to Jennifer gets $83,400, Crystal gets $66,600, and the total always has to equal your total net income that you were trying to allocate. our closing entry. We'll still close out the net income of $150,000, but the way we divided it up is a little bit different because we added in that percentage of capital calculation. Now what if we did our allocations and we didn't have enough net income to allocate? Well, we're just going to put in a negative amount and keep going. So here we're going to have only $100,000 of net income this time, but it looks like we need to allocate out $79,062 for a total of $141. So this is a negative number. So we're actually going to reduce what we give to each of them by that negative number. So that's how we'll do it. And then our closing entry will just still be these bottom lines. So the main thing to do is to practice this. I've gone through this quickly, but I wanted to give you an overview of what our goal is. So now what I want you to do is go into Cengage and practice these problems. Set them up using this setup on a scratch sheet of paper each time. Memorize this setup so that when you come to your test, you can apply it. And there's quite a few problems, and once you know this setup, they'll be all the same for you to work. So let me know if you have any questions at all. Thanks.